Hey everyone, welcome back to Corporate Decoder, the place where we untangle the twists and turns of corporate filings. Today we're diving into our Schedule 14A from Trinseo PLC, and trust me, it's more than just boardroom buzz. It has a few interesting details that might make you double check your portfolio. Get ready for a peek behind the curtain because this proxy statement has some interesting implications. Trinseo, a global materials company, is asking its shareholders to make some important decisions about the company's future at its annual general meeting, from electing directors to approving executive pay and even allowing the CEO and other executives to give back some of their stock options. It's all on the table. Let's break down what this all means. First up, what is this Schedule 14A? Simply put, it's a proxy statement. It's a document a company sends to its shareholders before a big meeting so they can make informed decisions about how to vote. It covers everything from who's running for the board of directors to how much the top executives are getting paid. In this letter to shareholders, Trinseo invites everyone to their annual general meeting happening in June. They're using something called the Notice and Access method, which means most shareholders will get a notice online telling them how to view the proxy materials and vote. This saves paper and money, but you can still request a paper copy if you prefer. The most important thing is they want you to vote no matter how many shares you own. So what are shareholders actually voting on? There are 9 proposals, including electing 9 directors, approving executive compensation, and ratifying the appointment of their accounting firm, PricewaterhouseCoopers or PwC. They're also asking for authority to issue shares, opt out of preemption rights under Irish law, set a price range for reissuing treasury shares, and even amend their incentive plan. Oh, and there's a chance for the CEO, CFO, and CLO to give back stock options. Each of these is important for shaping the future of the company. If you hold your shares through a broker or bank and you want to attend an annual meeting, you'll need to register online using a control number. And if you want to vote your shares in person at the meeting, you'll need to get a legal proxy from your broker. It is a little bit of a process, but that's how you make your voice heard. Now, about those voting requirements, some proposals need a simple majority to pass, while others, like opting out of preemption rights and setting the price range for reissuing treasury shares, need a supermajority of 75%. Abstentions don't count as votes cast. So every vote matters. Time to meet the nominees for the board. Kellen Johnson. The chair of the board has a strong background in the chemical industry and executive experience. Joseph Alvarado brings years of experience in manufacturing and strategic planning. Frank Bozich, the president and CEO, has a track record of driving business growth. The other nominees have experience in everything from manufacturing and finance to accounting and sustainability. Looking at the director nominees' skills, you see a good mix of chemical industry experience, manufacturing expertise, CEO experience, financial savvy, and public company board experience. It seems like Trinseo is trying to build a board with a wide range of talents. The company's board has determined that all directors except for the CEO are independent. They follow corporate governance rules and have a related party transactions policy. To ensure the effectiveness of the board, the non-management directors meet in executive session frequently. Moving on, the audit committee is responsible for reviewing any transactions with related parties. So as to keep everything above board, the company also has a conflict of interest policy in place. Time to look at who owns the company. M&G Investment Management Limited holds a whopping 21.4% of the shares, followed by Nuttree Capital Management LP with 9.8%. The executive officers and directors as a group own a much smaller slice of the pie, around 4.5%. This indicates that institutional investors have significant control over the company. As of the end of last year, there were nearly 4 million securities that could be issued from equity compensation plans, with an average price of $33.20. There are about 550,000 securities still available for future issuance. Let's talk about the big bucks, executive compensation. Trinseo says their compensation is designed to attract and retain talent, link pay to performance, and align executive interests with those of shareholders. It sounds like a standard approach, but it's important to see how it plays out. 2024 was a tough year thanks to weak demand and rising material prices. The company focused on cutting costs and restructuring, including shutting down some product lines and reducing the workforce in order to become a higher growth company. They also refinanced a lot of debt, extending their maturity dates, and are trying to sell their interest in the Americas Styrenics joint venture. Looking at the peer group, we see companies like H.B. Fuller and Huntsman. Salaries for the top execs are based on their responsibilities, performance, and what other companies in their industry are paying. In 2024, only Francesca Reverberi got a salary increase. A big chunk of the executive's pay comes from the annual cash incentive plan, which is tied to financial performance, safety, and individual goals. For 2024, the metrics were adjusted EBITDA and free cash flow. The compensation committee used what it called negative discretion to lower the payout for meeting the cash flow target. The reason to reduce it was because of poor stock performance, even though free cash flow metrics were met. On top of the cash, there's long-term incentive compensation in the form of stock options, restricted stock units, and cash units od scroll franke bozec, chavti LTI grant target performance amount